Taking a look to the market action this morning as we kick off another trading week. Really, you're just seeing perhaps that level of nervousness coming through because you've got Asian equities that are very much flat to start the week. No movement coming across in US futures as well. There is a lot of event risk, and we're really grappling with that this morning. Of course, what's happening in the Middle East, Bashar al-Assad out of power, and also ending what has been a brutal family regime that has been in place for at least half a century. Where we're sort of focusing our attention on that this morning comes down to the moves that we're seeing in Brent crude prices. Again, just coming online, we're not really seeing any sort of direction from that just yet. It does appear that at least investors, traders, are taking what's happening in the Middle East in their stride for now, even though there is that perhaps a power vacuum that's being created and certainly has question marks not just for Russia, for Iran, those major backers, but also for the likes of Turkey and more in the region. Israel, of course. We'll be tracking all the details in just a moment. But what else we're tracking is what's happening in Korea this morning. Let's change on, because here that sentiment is really shifting to the downside. We're watching the Kospi here, for instance. 2313 is the line to watch. That will be a 20% decline from its recent peak. The Kosdaq, for instance, already down 30% over the course of this year. So this is a market that really is not taking it to the political instability very well. We saw Yoon surviving that impeachment vote. The opposition party is just giving a presser, so we'll update with any headlines that drop from that. But the Korean won, again, we're under pressure so far in the session. It last traded, or at its weakest point, was at 14.44 when this instability really kicked off. Of course, to track as well is the events from Friday. The US, we saw payrolls edging up, but the employment or unemployment rate as well also ticked a bit higher in the US. Adding to that is what we had in the UMich survey, the University of Michigan survey. Sentiment for consumers, it rose. You saw it rising back to levels we haven't seen since April of this year. But again, inflation expectations, those also ticked higher. So yes, that base case is that the Fed will cut its rates this month. In December, that 25 basis point cut does seem priced in by traders at this point. But there is that question mark over the longer term with those inflation expectations ticking higher. What is the bearing of tariffs from Trump in all of this? And if you change on now, very big week ahead for China as well. We've got policy makers that are meeting for their work conference. We've got CPI from China, PPI figures as well that are due just this hour. So that question of what are the fiscal and the monetary policy measures that Beijing is likely to take, Steve, in the face of what is going to be that big tariff risk coming from the US as well.
A busy Monday morning, obviously, Annabelle. To our top story, obviously, is the Syrian President Bashar al-Assad has fled to Russia after his government collapsed following a rapid advance by Islamic rebels. The U.S., meanwhile, has launched airstrikes on central Syria, hitting what it says were dozens of Islamic State targets.
The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty.
Well, for more, let's bring in Bloomberg News desk editor Jill Deesis. So, obviously, lots happened over this weekend. Put it into perspective. Where are we with the power vacuum, if you will? Because Syria is so, in that region, so politically central as well as geographically central.
Yes, that's right, Steve. I mean, look, the U.S. and its Western allies certainly are no friends of Assad, and at this point have really said that they're not going to intervene with what's happening in Syria right now. Incoming President-elect Donald Trump has actually said something similar. But what this does create in this region that already obviously is dealing with quite a bit of uncertainty over the conflict involving, Israel and all of the groups that it's fighting, is that you're just introducing this new power vacuum here. So, I mean, look, Syrian rebel groups have been fighting obviously for decades at this point against the Assad regime, obviously now very suddenly successful here. But it does create a lot of concerns over what the incoming group may ultimately do. So traditionally, Syrian rebel groups, they've been a mishmash of different ideologies, but ultimately kind of dominated by some of those more, sort of extremist groups. I mean, HTS, the lead group involved here, I mean, that's a group that's been designated by the U.S. and some of its allies as a terrorist organization. Now, HTS has, in the aftermath of the situation here, tried to present itself as a bit more reasonable, but, it's really still uncertain over, what the rank and file ultimately believe and what that ultimately manifests in terms of maybe a new government or anything like that within Syria.
What would it mean for Israel in particular, do you think? Because the leader of HTS, that's someone who goes by the name of al-Jilani, that's his nom de guerre, but Mohammed al-Jilani, his family has roots in the Golan Heights region, which we've been hearing this morning is where Israel has entered into and past that demilitarized zone. What do you think it means for this conflict in particular?
Yeah, I mean, I think that at this point, I mean, it's still, again, like sort of this idea of risk and uncertainty. As you mentioned, Israel entering the Golan Heights, sort of like moving into Syria for, I think the New York Times is reporting, the first time since 1973. So obviously, there's some events here that have an incredible amount of historic significance. I do think one thing that's really interesting to look at as we kind of watch this conflict unfold is the fact that Iran really hasn't stepped up to sort of back Assad and sort of, back Syria. And I mean, but part of that may just be because obviously, Hezbollah, Hamas have been, incredibly crippled by this war that, the conflict that's happening in Israel right now. And so I think that when you take into consideration some of these broader concerns over the Middle East, how there's, all of these uncertainties and risks playing out with Israel, that kind of filters into what I think we're seeing in Syria.
There's so many power brokers involved in this issue right now, because you have Russia as well, where Assad has sought and received asylum, essentially. But, Russia has military bases in Syria. Obviously, they've been a benefactor to Syria. Then you have Tehran as well, where they have the land bridge to Lebanon and Hezbollah. So where does that leave Tehran and Russia?
Well, at this point, I mean, obviously these are two nations that haven't really backed Assad in all of this, but also because they're just dealing with a lot of their own conflicts, right? I mean, arguably, Russia will want to protect the bases that it does have in Syria, but it's still fighting the war in Ukraine. So when you look at the totality of everything that's happened here, I mean, we've seen time and again over the last, couple of decades, Russia in particular come in and back Assad during previous conflicts, but this time around, I mean, just really no scope, it seems, to sort of back him up. In this instance, it just, again, leads to a lot of political instability. You've got, different nations that need to come in and protect their own interests, but at the same time, that obviously didn't prevent his regime from being toppled here.
All right, Jill, really great insights. Thanks. That was Jill Desis there, our Bloomberg News Desk editor, and we're going to be digging deeper into the implications of the fast-moving events in Ukraine, and rather in the Middle East, in Syria this hour. We'll be hearing from academics, but also taking a look at what's happening in closer to Europe, because that, as we were discussing there, the implications around why Russia perhaps has also not been able to give that level of support to Syria. Over the weekend, of course, you're seeing that picture there of US President-elect Donald Trump, French President Emmanuel Macron, meeting in Paris on Saturday with Ukraine's Zelensky. So Macron had sought the meeting to initiate a discussion on ending the war in Ukraine, but officials that are close to Macron and Zelensky say that the meeting was positive, but they didn't actually give any details. Steve?
Yeah, so much happening this Monday morning. It's not all Syria, obviously. It is also the markets. We're looking ahead of that Central Economic Work Conference that starts midweek in China. And the markets, the CSI 300 and also the HSCI here in Hong Kong, they were up more than 1% each on Friday, as we found that the Central Economic Work Conference in Beijing is going to be held Wednesday and Thursday. Of course, all eyes on whether we're going to get any kind of fiscal number of stimulus. Generally, that Central Economic Work Conference is centered on broader priorities for the economy. But will we get any kind of specifics in the readout once that closes after Thursday? Of course, Vanke will be looking at that. We had contracted sales of 20.13 billion yuan. Again, waiting for any kind of stimulus signals from the Central Economic Work Conference. The CGB rally obviously has been in tandem and lockstep with the stocks rally that we saw last week. Again, on tenterhooks, again, the market ahead of any kind of policy direction coming. And then inflation data. Look, PPI deflation, 25 consecutive months in deflation for factory gate prices. Again, we'll have to see if the prices have any kind of traction, if you will. CPI inflation in China has been in low single digits for 9 consecutive months. Hasn't gotten any kind of traction, even after that September stimulus that we got. Annabelle?
Yeah, well, I think to your point, Steve, around sort of how much traders and investors are awaiting for details from the work conference this week, we've already had some clues coming through from Chinese state media because they're sort of just giving us hints on the potential direction of policy, again, ahead of that key meeting coming ahead. So a look at what we're seeing. The latest in a series of articles on the economy is coming from Xinhua. So we've seen those major posts over the course of last week. Over the weekend as well, the official news agency said regulators are going to be trying to boost the property market. Improve policies on land use, for instance, tax, other financial measures. But it does say that the market has bottomed out after recent policy moves, even after the data showed residential sales fell again in November. And meanwhile, a previous part of the series suggests the central government has room to increase its borrowing and fiscal deficit next year. Xinhua says the government's leverage ratio is far below the global average, and that allows it to boost debt. We're going to have more on the Chinese economy coming up as well, because Goldman Sachs joining us, Steve, to discuss the November inflation figures you're mentioning there. Key takeaways from their conversations, because they have been on the road, major cities, Beijing, Shanghai, Shenzhen, Guangzhou, over the past few weeks.
Yeah, Hui Shan will be watching that one. We'll also be talking markets with Mirae Asset Global Investments amid the political upheaval in South Korea. How does that story get pushed down the agenda? It's still very, very much live in Seoul. All right, we're counting down to the open of trade in Shanghai, Shenzhen, and Hong Kong. This is The China Show. And welcome back to the China Show. We're getting live pictures here from the South Korean Democratic Party. Of course, the political crisis is ongoing in Seoul at this time. We're also getting a headline coming across from Seoul that South Korea police are not ruling out the possibility of questioning President Yoon or for treason. That is, of course, something the opposition party, an allegation they've leveled at the president, as he called last week for that martial law, which the opposition has said was illegal and treasonous. For more, of course, let's bring in our reporter in Seoul, Sang-mi Cha, joins us for more. Sang-mi, get us up to date here. Tell us what's happened over the weekend and what's next.
Yeah, let's go back to Saturday. In the morning, we saw a 2-minute apology from President Yoon Suk-yeol, who came out and said he will take all the responsibility and legal responsibilities for what he has done on Tuesday night by declaring the martial law and very quickly rescinding it. And then there was that waiting game until 5 p.m. when the lawmakers went to vote for that impeachment. What happened was that it never really went through because usually you need 2/3 majority of the 300-member parliamentarians, but then the ruling PPP, the People Power Party, has 108 lawmakers, and all they needed was that 8 defections from that party, and they were not able to get that people. And so motion did not go through, and we're in somewhat of a vacuum state right now. So immediately after, on Sunday, Han Dong-hoon, who is the ruling party leader, came out and said from now on, the Prime Minister Han Duck-soo, will take care and manage the state affairs. But of course, the main opposition party said they rejected this plan, and they said this is unconstitutional. So we are still waiting on what's going to happen next. What the opposition is saying is they're going to keep on submitting these impeachment vote, and we will see whether this is going to be on constant loop.
And Sang-mi, just as we're talking now, we actually are getting local media reporting on the ex-defense minister, and we are understanding that the prosecution plans to summon him again. So as really just points to how much this is a developing story. But the market reaction, investors had sort of seemed to take it in their stride and had listened to what regulators were saying about that stability. But this morning it seems like the losses are accelerating.
Yeah, so we've been seeing both Kospi and Kosdaq deepen that sell-off. And of course, Finance Minister came out early in the morning in a briefing, after his meeting, and said they are going to do everything possible to boost the market and to prevent this market meltdown. And we've seen Kospi pairing a little bit, but we see a lot of these sell-off led by retails and also from a lot of these value-up proxies. Value-up was the reform that President Yoon was pushing for. So namely, these are the financials. A lot of the banking stocks are doing pretty badly today. And looking at Kosdaq, the small cap index is down as much as 3.8%. That's the lowest since May 2020. And the won is also declining. It's 0.4% down against the dollar. So all of this is kind of factoring in all this political instability, which is not good for any markets. A lot of the traders have been telling me that they're reassessing how prolonged this stalemate can go. And that would be a pretty bad idea for the Kospi, which is already one of the worst performers in Asia.
All right, Bloomberg's Sang-Mi Cha in Seoul, keeping us up to date on the latest from that political issues in South Korea. Let's bring in our guest. Joohee Han is the CIO at Mirae Asset Global Investments. Joohee, thanks for joining us. Obviously, you cover a wide swath across Asia, ex-Japan, but we have to start in South Korea. You are overweight India, Taiwan, Indonesia, equal weight China, underweight, continue to be underweight Korea. How do you assess what Sang-Mi just outlined here, how the markets are reacting and selling off South Korea?
This event it's such a disappointing event for investors who have been expecting for the market re-rating through value up program. And then this one, the Korea discount, so-called Korea discount, is kind of being justified by this, like a leadership crisis. So especially when we see few sectors where we expect kind of limited growth potential of the earnings estimates for next year. So it was mostly because the people who are bullish for Korea is basically because of the re-rating potential and the kind of efforts by the government and then exchange and then the conglomerates, to change the corporate governance and all the financial structures and to boost, the values of the shareholders. But I think now this, leadership crisis is kind of, putting more pressure on the execution and the progress of that effort.
And we have seen that sell-off really following the Yoon's calling of martial law or that decree. But when do you think we reach a point where equities actually do appear attractive just on a valuation basis?
We still have to see the development of this event. But if you recall, like 7 to 8 years ago, when the President Park faced the impeachment, at least it took the 1 quarter after it happened. So and then now, over the weekend, they failed. The opposition party, they failed. So I think it's going to, this pressure, market pressure, is going to be lingering for an extended period of time, I would say. It's at least like a few quarters from now.
A few quarters. So then,
that's what I'm thinking.
So then investors and advisors such as yourself have to think about where do you rotate out of Korea to?
If they have overweight, and then if they are rather short-term kind of investor. So it really depends on the time horizon. I'm not saying that I'm overly pessimistic on the outlook of the capability of the companies or the governments and people to overcome this crisis. But at least in the near term, instability of this government leadership is going to have a negative impact on the market.
Part of the perception of why Korea has sort of lagged behind is also because it's falling behind in the AI race, or that feeling that it's not as strong as Taiwan, for instance. Do you see that perception changing anytime soon? I mean, we're waiting, for instance, for Samsung's HBM chips to be certified by NVIDIA. And what's your outlook on that part of the market?
Yeah, so that's a very good and timely question because people in the past, usually they combine Korea and Taiwan together as a beneficiary of the AI development in Asia. But now it's been only like few months and then especially last few weeks, we saw the big drop of the prices in kind of like a more mature in the commodity, the memory chips. So now we have to kind of separate. So Taiwan and Korea as the beneficiary of AI development, because we see lots of Taiwanese the companies are playing the pivotal the roles in many different areas of the supply chains of AI development, while in Korean companies they are actually playing a very important role in memory side only. So if the memory side, we see the more pressures on the prices going forward, even though the very advanced area will continue to do good, but the overall the sentiment is not very good for the overall memory sector. Then I think it's also another discount factor for the Korean market.
And you are overweight Taiwan, equal weight on China. What are you waiting for from China? Obviously, the whole market's waiting for any kind of number from the Central Economic Work Conference.
Right. So from this work conference, we do not expect to hear very detailed numbers or execution plans, but at least I hope and I expect them to talk about how important the boosting domestic consumption is. Of course, the investment side, just like we saw in 2008 or 2009, when they deployed a very large-scale stimulus plan back then, it was much easier for them to deploy that much money because at the time they didn't really experience the overcapacity issues. But now they have to be much more selective, when they deploy the money in investment side, to avoid further deflationary pressures from that overcapacity issues. So at the same time, this tariff issue driven by the Trump, so this basically they have to rely on the domestic demand consumption to support a certain level of the economic growth. So I think I expect to hear how important that is going forward, and then I think maybe next year, after the Trump comes in January, and then maybe in March, during 2 sessions, maybe they could kind of release more detailed plans for that. Yeah.
All right, Joohee, thanks very much for joining us this morning. That was Joohee Ahn, their CIO at Mirae Asset Global Investments. And, of course, we're just about 5 minutes away from the start of trade in Hong Kong, mainland China, and that big focus on what are we going to get out of the work conference this week. We've got those CPI, PPI numbers just a few minutes away as well. But to note some of the movers, and we're keeping a very close watch on what's happening with some of the contract drug manufacturers, because we are seeing them gaining this morning. They have been left out of a key U.S. defense bill. This is the Biosecure Act. The Act would have sought to blacklist at least 5 Chinese-linked biotech firms, but that actually hasn't gone away. There's that absence of these names in that, and so we are seeing that relief coming through. What else we're tracking are some gold-linked names this morning, because the PBOC, which actually has been one of the major gold buyers, has been entering back into the market again, and so we are just keeping a watch on some of those gold miners in the session this morning, given that the PBOC has resumed buying gold this morning. What else we're tracking, of course, in the pre-market, as we said, it's that focus. What are we going to get out of the work conference this week?
That's what we're all waiting for, right? And I think Joohee mentioned it as well. We're trying to see whether we're going to get something now, or do we have to wait to Liang Hui, the 2 sessions, the National People's Congress and the CPPCC in early March. That's just going to, dare I say, upset the markets a little bit further if we have to wait until March to get some sort of number ahead of course, Donald Trump coming back into the White House on January 20th on how much consumption-driven stimulus can we get to offset the threat of tariffs? Well,
I think sometimes it's that relative attractiveness. Which markets just look relatively more attractive, and when you don't have that clarity coming... Exactly. The lesser of 2 evils, I guess. But anyway, yuan reference rate also to note, because we've seen it coming in at 7.1870, so another stronger than expected fix. And also just keeping a watch on some of the analyst actions this morning. A couple there to note from Goldman. We saw them cutting the Melco International to neutral, Samsonite as well. The price target at 28 there, and SAIC Motor reinstated to buy at Founder Securities. So that's it. As we said, CPI, PPI, those numbers are dropping in just a few minutes from now. So we're going to have those details ahead. You're watching The China Show, and this is Bloomberg.
And welcome back. You're watching The China Show. We have some breaking news coming across the Bloomberg terminal, citing Yonhap news agency that South Korea police are considering placing President Yoon under a travel ban. Of course, there was an earlier headline as well that they are not necessarily ruling out action against the former president. Now we're seeing that they are considering placing him under that travel ban. Of course, after last week, he had that 6.5-minute speech midweek where he declared martial law. He quickly rescinded that, but again has plunged South Korea into political chaos right now. He did survive essentially a non-impeachment vote on Saturday, but again, opposition parties are trying to reignite a impeachment vote as they're saying his actions last week were treasonous and illegal. So that is the latest on South Korea at this moment. We're also checking, of course, ahead of the market open. Right about now, of course, the CSI 300 was up on Friday, opening up just about 0.1% down, and the other sub-indices also trading sort of flat ahead of Wednesday, Bell, the beginning of the Central Economic Work Conference.
Well, Steve, I've got some good news.
What's that?
The PPI and the CPI figures have come in better than what economists had been expecting. So PPI, it's still in deflationary territory, but it's down 2.5%. The survey had been for negative 2.8. That's also better than the month prior for negative 2.9. So again, that headline reading on PPI, contraction of 2.5%. CPI, again, actually, no, that is worse than expected.
It is worse. So that's a
2%.
10th consecutive month of CPI inflation in low single digits and 26 consecutive months, more than 2 years of factory gate deflation at producer prices. Yes, 2.5 down is better than before, but still, it's a trend.
All right, well, let's get more on the trend and bring in Hui Shan now, Chief China Economist at Goldman Sachs. So you just heard us talking through some of the figures there. What's your initial reaction to the numbers?
I think regardless of whether it's in line with the consensus expectation or somewhat off, the whole picture is that inflation has been way too low in China for too long. And this is because prices are a good signal of how demand versus supply, how the balance of the two. And this is continue to telling us that we have too little demand versus too much supply. And therefore, it's a no-brainer that we need to strengthen the demand side of the equation and having the policymakers do more.
Yeah, how are we going to strengthen that consumer demand? Without a stimulus targeted at the consumer, are there other ways? Because there is that lag effect as well from factory gate to prices on the shelves. So that's still quite some time if we're having this many months consecutive of deflation.
Right. I think, it's never going to be overnight. And even if the policymakers introduce strengthening policies on the demand side, it would take a while for PPI inflation to turn positive again. And we were just talking about this when we were putting out our outlook. We're expecting PPI to turn positive toward latter part of next year. And that at the time was below consensus. And when we were marketing onshore, investors were even more pessimistic about the prospect of a PPI turning positive. So this is getting to the difficulties of turning things around. On the one hand, it takes time. On the other hand, you also have investors being very pessimistic, and that's going to take even longer time.
Well, that's it. It's that perception and how much that plays into it versus the actual realities sometimes as well. And go into more details of what you learned, because as you said, your team was on the ground for about 2 weeks there visiting Shanghai, Shenzhen, Guangzhou and Beijing. And what did you sort of learn, and why do you think people were more pessimistic in saying that we actually couldn't see PPI turning positive until 2026?
Yeah, I think a few things. When we were in China, say October, even early November, onshore investors were notably more optimistic because they think the top leadership has changed mind, and if you wait, there will be more stimulus coming this way. But this time around, late November, when we were visiting them, we sensed they're getting a little bit of uneasy because they haven't really seen very strong signals on the fiscal front, on the stimulus front. So they're still, compared to offshore investors, still more hopeful. But at the same time, we can visibly see that they're getting a bit uncertain and nervous about, is the 2025, the whole economic planning going to be as constructive and bullish as they were hoping for.
What are you looking for? What do you think the Central Economic Work Conference? Well, they're going to be very short on details. I've covered a number of these things. They give a very bland statement, but they also kind of set out economic policy guidance, if you will, going forward ahead of Liang Hui, the two sessions in March. But what do you think, given this continual, persistent deflation, the threat of Trump tariffs, all this, what do you think they need to do and send a signal?
Yeah, I think this is a bit feature of how policy making is in China. As you guys have followed China for a long time, even if they put out a set of statements because there's no numeric targets or fiscal deficit, all these numbers a lot of analysts want to see and digest. I worry that even if they sound supportive of dovish, and people are still going to hold this wait and see. I need to see the numbers. I can't just when you say we need to stabilize the properties market, how, when? And do you have specific fiscal numbers to back it up?
Promise fatigue.
Yeah, a little bit of that over the past year or two. So I do think that they are going to sound dovish. They are going to emphasize things that are top of mind for investors, whether it's a property sector, whether it's a consumption. But at the same time, part of me wonder, after these important meetings, highly anticipated, whether we're going to in a situation, let's wait for the two sessions.
What do you make then of the recent PMI data? Because that did show some improvement in the manufacturing sector. Do you think that's still that story of maybe exporters and front loading of orders ahead of tariffs? Or do you think that we are seeing, at least in some parts of the economy, an improvement?
I think the front-loading exporters speeding up exports, that is one important part of it, because it's consistent with equity analysts and shipping companies are telling us. I think the consumer goods trade-in program that has been doing very well also supported manufacturing activity. But I think the underlying concern is that manufacturing has been very good, but manufacturing sector doesn't hire as many people as non-manufacturing services sector. And when you look at the employment and labor market, that's something we're concerned about.
Where does the latest stimulus really need to be targeted at? Because some would say the housing market basically depletes the confidence of the consumer because so much of household wealth is tied to property. So do you need to do much more on property, or do you need, I mean, Xi Jinping is not a welfare advocate. He's not going to give handouts of cash or vouchers or anything like that. Trade-in programs are his preference. But do we need to stimulate the actual consumer spending or housing or exporters as well, manufacturing?
I think at this point, given how strong Chinese manufacturing capability, how competitive Chinese goods are, I think the focus should be on services, on consumption, on labor market, on household income. I think that it is difficult, but helping the low-income households does go a long way, because low-income households have higher propensity to consume. I'm thinking even beyond autos and home appliances, thinking about other ways of helping families and households are the key.
Tariffs, we sort of just touched on a little bit earlier, but what's your expectations around that? Because I do notice that your assumption is that the average is going to be 20% tariffs. But again, going back to what you said about the roadshow with clients, they're also more pessimistic on that front as well.
Right. That's a key debate in the market. What will Trump do to Chinese goods going in U.S.? Our assumption is a 20% effective tariff rate. For some manufacturing goods like machineries, equipment, we do assume there will be 60% additional tariffs, meaning from 25% to 85%. But we also examined the 2018-19 experience. Trump didn't put a high tariff on consumer goods, so we put much lower rate of tariff going forward for consumer goods. If you blend it together, it's 20%. Percentage points that we are assuming in our baseline. Just to compare, 2018-19, after all the tariffs, the effective tariff rate is only 10%. So adding another 20 is doubling what we saw in 2018-19. But that apparently is lower than a lot of onshore investors are expecting. They're thinking 30-40 is more likely.
Okay. Hui Shan, also, let's talk about the capacity for China to retaliate. How many more arrows are in the quiver for them to retaliate. And do you expect that? And what kind of dampening effect does that have on global trade, obviously, if we are entering into a protracted trade war?
Yeah, that's one of the most asked questions these days. I think some of the instruments Chinese policymakers used in the past, including currency depreciation, including retaliatory tariffs, are likely to be used again. We are expecting CNY to depreciate somewhat. But I also want to emphasize there could be other levers that Chinese policymakers could pull, including geopolitical factors and also supply chain. China is dominant in a lot of sectors, and thinking about rare minerals and rare earth and minerals restrictions, we are seeing signs of that happening.
Okay, Hui Shan, Chief China Economist at Goldman Sachs. Thanks so much for your time and your insights. Okay, coming up, we're taking a deep dive into how businesses are preparing for the impact of Trump's potential tariffs. Andrew Tam, CFO at shoemaker Stella International, joins us later, together with CLSA research analyst Chris Gao. Keep it right here. You're watching The China Show, and this is Bloomberg.
We're clear-eyed about the fact that ISIS will try to take advantage of any vacuum to reestablish its capabilities and to create a safe haven. We will not let that happen.
That was President Biden there following the ousting of Syrian President Bashar al-Assad. And let's bring in Middle East expert James Dorsey. He's adjunct senior fellow at the S. Rajaratnam School of International Studies. And thanks very much for joining us this morning, Jack. And I want to get, or James rather, and I want to get your view on essentially the events over the weekend. There's a lot of different threads to us to follow, but I see in your notes that you're calling this a tectonic shift in the Middle East.
Good morning. Indeed, I think this is a tectonic shift. It's a tectonic shift, in particularly given the fact that this punches a huge hole into the forward defense strategy of Iran. And what that means is that Iran will have to rethink its defense strategy and, in fact, probably rethink some of its policies. And that means a paradigm shift in the Middle East. Syria is no longer there as a major anchor of what the Iranians have called the axis of resistance, this alignment of non-state, armed militant non-state actors like Hezbollah in Lebanon. And one of Iran's major deterrence assets, the fact that it had Syria and the Lebanese militia Hezbollah on Israel's border, has now all but vanished.
Well, James, on the supply chains, if you want to call it that, Tehran also had this sort of land bridge through Syria to the Hezbollah in Lebanon. How significant is this if this is choked off?
It has been choked off for all practical matters, and it's very significant. One, it essentially breaks up the defense strategy of Iran, but also it significantly weakens an already weakened Hezbollah. What Iran potentially will retain in Lebanon is not so much an armed militia that is on the border of Israel, but a political force. And that, of course, changes Iran's options and leverage that it has.
And so, to the point of Israel then, because we've been tracking this morning how Israeli forces have seized a buffer zone in the Golan Heights following these events over the weekend, where does that leave the conflict between in Israel and Gaza then?
I don't know that this necessarily influences the conflict in Gaza. Keep in mind that the relationship between Iran and these various militia groups, particularly, for example, Hezbollah and Hamas, are very different relationships, and they're not Simon Says relationships. Hamas may or may not be aligned with Iran, but in terms of the war in Gaza, Iran doesn't have access. It can't supply. It can at best give political support. So I don't think that this in and of itself is substantially going to change things. In addition to which, Hamas has supported the overthrow of Assad in recent days.
Well, James, how do you read the different factions within Syria now that they've overthrown, Assad? Obviously, he's fled the country. Are we going to get into tribal warfare, if you will, to put it into sort of crude terms? And do we know where their allegiances are going to be?
I think that's the big question. There are signs to be hopeful. With other words, we've seen Hayat Tahrir al-Sham, the lead rebel organization, and its leader, Abu Muhammad al-Jalani, be quite moderate in the way they've approached this. We haven't seen major looting. We haven't seen major acts of revenge. We haven't seen attacks on minorities. On the contrary, you've seen the rebels acquiescing in the departure of Bashar al-Assad from the country. And you've seen a reaching out in Damascus to the remnants of the Bashar al-Assad regime. That all of that is good positive signs. Now, having said that, you have an array of rebel groups, all of which are going to want a share in the pie, and how that is worked out and whether or not that leads to violence, we will have to wait and see.
What about Turkey's role in this? Do they emerge here as sort of a kingmaker?
I think it's wait and see. Turkey has clearly had relations with Hayat Tahrir al-Sham. It has relations with other militias. Turkey's while Turkey may very well want a relatively moderate, or in any case, not a non-jihadist Islamist-run government in Damascus, its primary concern, first and foremost, are the Kurds in the north. And there the question is what a new government, presumably in which Hayat Tahrir al-Sham plays a major role, what its attitude is going to be. It will want to restore Syrian sovereignty over all of Syrian territory, which includes the north where the Turks have a buffer zone. It's talked about inclusivity for all in Syria, and there's been some mention of decentralization, which could mean that the Kurds would get some degree of, or could get some degree of autonomy in northern Turkey, something the Turks would be fundamentally opposed to.
Yeah. And Turkey obviously playing a key role in essentially as they share that northern border and the refugee crisis that has transpired over the past decade. But I kind of want to shift to the other major player in this region and the influence it has had on Damascus, and that is Russia. Obviously, Vladimir Putin is preoccupied with Ukraine. I'm not speaking on behalf of the Kremlin, but they kind of said, it's up to you now, Assad, essentially allowing him asylum, but not necessarily backing him in his time of need. What does this mean for Russia going forward, which has military bases in Syria?
Well, first of all, just as a matter of principle, I think that's true for Iran as well as it's true for Russia. It's very hard to defend a regime that has no apparatus to defend itself. With other words, if the military was falling apart, the Russians and the Iranians didn't have a lot of options. What is interesting going forward is that Russia has two military bases, a naval base and an air base on the Mediterranean coast. Losing those bases would mean that it loses its foremost military footholds in the Middle East and on the Eastern Mediterranean, and that is significant. Now, we haven't heard the rebels at this point yet speak about the future of those Russian bases. It's not inconceivable, I don't think we know, whether or not there was some deal that was cut in terms of the departure of Assad fleeing to Moscow and the future of these Russian air bases. What is certainly true is the Russians do not seem to be all that security concerned about it. In the days prior to the fall of Damascus, they advised their citizens to leave Syria on commercial flights rather than provide evacuation flights. And they've also said that there's no panic at the military facilities.
What about the role for the US to play here, if at all? We've already got a Trump post on social media indicating further just the isolationist policy that we might see in foreign policy. But do we see Washington's focus on counterterrorism, containing the Islamic State, shifting at all?
Well, I think what's good, there's been an emphasis already on the United States of warning that the vacuum in Syria, to the degree that there is a vacuum, should not be filled by the Islamic State. And I think the real question is going to be what U.S. policy is going to be towards whatever government emerges. On the one hand, you have a U.S. designated group, a group designated by the United States as a terrorist group in the lead in Damascus. But on the other side, this is a group that is trying to shed its, or claiming that it has shed its jihadist antecedents, and also has framed its policies going forward as policies that would involve counterterrorism, which is, in a sense, trying to reach out to the U.S. concern with regard to groups like the Islamic State. So I think we're going to have to wait and see. The United States has great influence in Syria, not only because it has troops there, but it has troops in the area which produces or has Syria's oil wealth. And this is going to be a government that's going to have to focus on the rehabilitation and reconstruction of an economy in a country that was ravaged by more than a decade of war.
James, great having you and getting your insights in what is obviously going to be a prevailing story for us around the world for quite some time. James Dorsey of the Rajaratnam School of International Studies in Thailand. Plenty more ahead. This is The China Show, and of course, this is Bloomberg.
Taking a look at some of the movers, actually, that are gaining this morning against what is sort of a very flat session overall. But we do see Chinese biotech stocks that are rallying this morning because essentially it's what they've been left out of, not what they've been included in, but it's the US Biosecure Act. And this is a key US defense bill. These names haven't been included. So you're seeing that relief that's coming through in these names. Broadly, as we take a look at what's happening in Chinese equities this morning, again, as we said, flat, Hang Seng a little bit under pressure, but we had the CPI coming in a little bit of a gain, but still under that 0.5% mark. Welcome back to The China Show, taking a look at how the Hong Kong benchmark is faring 30 minutes into today's trading, and we're seeing some pressure coming through. Actually, it's a little bit outpacing the losses we see for the CSI 300, which is flat this morning, but it is just as traders digest really the events over the weekend. Yes, we've had the inflation figures coming through, but notable today as well is that property is leading the drop, and we have had those lines crossing from Xinhua, just another sort of piece ahead of the Central Work Conference this week, or Economic Work Conference, and they are looking at improvements.
Well, this is about the most vague headline you can get, but that's to be expected. Sometimes specifics are lacking out of Chinese statements. Xinhua saying China's regulators seek improvements to property market. Well, that's not moving markets right now.
No, but what could be perhaps moving it in some corners is what's coming through on the inflation front, because if we take a look at long-dated bonds, for instance, we're seeing yields falling on the stronger PPI that came through. So this was actually better than what economists had been expecting for the reading. Still in deflationary territory or contraction territory, but a drop of 2.5%. The estimate had been for 2.8% in negative territory. So a bit of an improvement from the month prior. Still, though, those question marks, because we track that 10-year yield under the 2% mark, and what does that signal to us about the health of China's economy, really? And this expectation around tariffs that come into play next year with President Trump, or elect Trump back in the White House.
That's why we keep on going meeting to meeting, waiting for some sort of guidance coming from regulators or policymakers after that big bang stimulus we got at the end of September. We haven't had that ever since. The markets have been kind of languishing ever since. So we're waiting midweek this week for that Central Economic Work Conference, if there's any meaningful headlines coming from that, or do we have to wait until the two sessions in March, the annual session of Parliament?
It's sort of wait and see on the China front. We've also got a host of central bank decisions this week. It's also a lack of uncertainty coming through in Korea's market as well, given we've got this instability around President Yoon. Yes, he's still in power, but really for how long? The events in the Middle East over the weekend not really doing much to dent Brent crude prices so far. We are just seeing them just a little bit higher, but certainly another one of our top stories this morning. So that's Asian equities here, but also going to our MLive strategist, Mark Cranfield, now in Singapore this morning. So, Mark, we're going to get to the Middle East and to Korea in just a moment, but let's start off with the inflation figures and what stood out to you in those numbers from China.
It means that they really can't afford to relax in terms of the Chinese authorities. They've obviously got a huge job to keep on trying to get the economy back on track here. And to have deflation in the PPI for such a long period, a couple of years now, CPI even dipped lower, which is another very negative signal for them. They're really struggling to get any fire in the Chinese economy. So investors will be looking for some pretty sparking headlines this week out of the Works Conference. They really will need to have reassurance that they're not going to stop all those measures that were announced back in September. There was a lot of good talk there. PBOC have done positive things as well. But investors will need a lot more convincing that they're going to keep their foot down here on the accelerator and keep going right through into next year. Because otherwise, they're really going to lose momentum very quickly. They're going to lose the confidence of traders. And you can see it's pretty hard. The Chinese equity market goes up one day, down the next day. It's not really getting the traction that the authorities would like to see. So a lot of work for them to do. The economic numbers are not really supporting their case at the moment. So they're going to have to talk about fiscal deficit. They're going to have to convince everybody that they are willing to spend a lot more, let the deficit get wider, and then there will be hopes that they can easily achieve the 5% growth target for next year. Right now, it's not looking that good. They need to work harder on this, and they will be expected to give out some pretty positive sound bites this week when they meet and deliver their views to the world later in the week.
Mark, hold on one second. We're just getting more headlines coming from Yonhap News Agency out of Seoul. South Korea police say they could arrest President Yoon if conditions are met to do so. So obviously the Korea discount's getting deeper and deeper, price cuts slashed at the storefronts in Seoul as this crisis continues on. So what are you going to be watching for if this continues? If Yoon holds on, if there's not another impeachment vote, if police arrest President Yoon, what are we watching for from a market's perspective?
You can see there's a couple of things here that shows how investors really are very disappointed in the situation in Korea. If you look at the Kosdaq, it very rarely trades on relative terms below the Kospi, and yet that's happening. It's been many years since the Kosdaq was trading with a discount. All Korean stocks are trading relatively cheap compared to their regional peers, but the Kosdaq is really underperforming. And that's a pretty worrying signal because that's a lot of retail-based investors are tied up in that one. So that's not a really good sign. Even the Korean bond market is really failing to get excited. You would expect there will be a big haven bid for Korean local bonds, considering the Bank of Korea recently surprised with a rate cut, and they'll probably need to do another one pretty soon as well. So again, it just shows that there's very little confidence in Korean assets across the board. The currency, the equities, and the bonds, all underperforming at the same time. That's a pretty worrying signal. So we probably need to see a turn in each of those. Probably the currency first. That's probably the first place where people would start to show that they're a bit more confident on what's happening. Then the equity market and eventually the bond market. But when you've got all securities aspects going in the same direction, that's a very worrying signal. The Korean authorities may even need to persuade the Bank of Korea to do an early rate cut, get ahead of their January meeting. Because right now, all Korean assets need some really big help from the government and the authorities.
Yeah, we're actually just seeing the Korean won pretty close now to where it fell to when this unrest started at 1444. But in the Middle East as well, because of course it's been a really stunning speed of events there over the weekend. Bashar al-Assad has fled to Moscow. As we know, there's a power vacuum now that's being created. But in terms of the market reaction, what are you tracking out of this, if anything, really?
We saw a small flip higher for gold. That's probably a sign that people putting a little bit more into a haven. It wasn't very much, but it did rise a little bit. We've not really seen much of a reaction in the oil prices. That would be the main signal where you would expect to see people, if they're nervous, you would expect to see that expressed in a higher oil price. Hasn't really happened so far. Even US Treasuries haven't captured much of a bid. So the thinking seems to be at the moment it's a bit of a side issue. It's not central to what's going on in the world. We do have Federal Reserve meeting coming up pretty soon. That's by far the biggest swing factor for global markets. So they're much more concerned about whether the Federal Reserve will go ahead with an interest rate cut. We've got a CPI report this week. That's the last piece of important economic data the Fed will see before that. So really, it's much more about global central bank policy, and Syria, for the time being, is a bit of a sideshow.
All right, Bloomberg MLive strategist Mark Cranfield in Singapore. Thanks for joining us. For more on the Syria issues, Bashar al-Assad has fled to Russia after his government collapsed following a rapid advance by Islamist rebels. The U.S., meanwhile, has launched airstrikes as well on central Syria, hitting what it says were dozens of Islamic State targets.
The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty.
All right, let's bring in Bloomberg News desk editor Jill Desis with us. So Mark Cranfield called it a bit of a market sideshow, but obviously geopolitically this is a critical region and a critical developing story over the weekend. There's a power struggle potentially going on within the country, and also a struggle of influence of various parties, whether it's Iran or Russia.
Yes, that's right. I mean, as President Joe Biden just said there, I mean, we've certainly entered just an increasing period of risk and uncertainty within the Middle East here. At this point, I mean, the big concern with Syria right now is exactly what happens now that we've had this very sudden fall of the Assad regime. So the lead rebel group involved here, that's HTS, I mean, it's a little bit uncertain as to where they're ultimately going to go and what they ultimately do in terms of any kind of leadership. The leader of that group has said that he wants to work with the remaining prime minister within Syria to kind of see where things go. But I mean, look, there's a lot of concerns, at least coming from the U.S. and its Western allies over what exactly happens here. I mean, Syrian rebel groups have historically, tended to be, much more sort of fundamentalist, extremist. So there's some concerns about what that ultimately looks like in the event that some of these groups take leadership. Now, certainly HTS has said, they're trying to project themselves as a bit more of a moderating force within the region. But again, it's just really not clear where that ultimately goes. I mean, whether we're going to see something as we did in Libya many years ago after, the death of Muammar Gaddafi, and whether it means that we're carving up Syria into different spheres of influence here.
You read my mind, because I was thinking the exact same thing, the Arab Spring and the destabilizing effect that had with basically removing somebody who had been in power for so long. There was stability in the tyranny.
Yeah, I mean, that's exactly it, Steve. I mean, when you're looking at this with this type of situation, I mean, certainly, the U.S. is no friend of Assad. And, I mean, you just heard Biden talk there about the fall of this regime. Obviously, the U.S. isn't really intervening here. But at the same time, yes, I mean, when you bring in all of these different forces that are sort of jockeying for power, whether that be the rebels, whether that be, Turkey, perhaps. I mean, again, you've got these outside forces, Russia and Iran, which have historically been allies of Assad, obviously didn't intervene here, but still do have interests within the region and within Syria. That's sort of what's leading to all of this sort of projection of risk that we still have to kind of figure out and manage through, the coming months, certainly.
So who becomes the most important power broker then in this situation? Because Russia's already indicated that they don't really have the capacity. Neither does it seem Iran does. There's Israel that's already entered territory. There's Turkey that's provided support to HTS. Who are the most important players to watch?
I mean, certainly, Belle, I think that those ones are still important players, even if they're not not directly, even if, say Russia, for example, isn't directly intervening, I mean, it's still important to note that they have bases within Syria. So we'll have to see what happens there. Russia certainly has a motivation to protect its interests within Syria, although obviously they're occupied with the war in Ukraine. And I mean, you can say similar of Iran in sort of, working with, the militia groups that are fighting Israel right now. So there's a lot of people here that are still, and obviously Turkey, sort of continues to be involved here. So, I mean, there's a lot of groups that do have interests here, but this, the toppling of this regime is certainly coming at a time when you've got a lot of groups that are have sort of their own interests or their own conflicts that they have to manage. And so that's, again, just adding to some of this instability.
There's U.S. military presence in the south as well.
Exactly. Yep.
Yeah, I think about 900 troops that have been stationed there. All right, Bloomberg News Desk editor Joohee says certainly the speed of the developments has taken a lot of people by surprise. But still ahead on the China show, we're actually going to be shifting focus a little bit to Trump tariffs. Of course, really the bread and butter of this program, but taking a deep dive into how businesses are preparing for the impact of those levies on Chinese businesses in particular. Stella International CFO Andrew Tam will be joining us, as well as CLSA research analyst Chris Gao. Plenty more ahead. This is Bloomberg.
And welcome back. You're watching The China Show. We have more headlines crossing out of Seoul, where, of course, there is a political crisis still unfolding into week two, following, of course, President Yoon's surprise declaration of martial law last week and the political implications since then. South Korea police are saying they could arrest President Yoon if certain conditions are met. That, according to the Yonhap news agency, they are considering, according to the Yonhap, placing President Yoon under a travel ban. And also, the South Korean police, again, are saying, or according to Yonhap, they're not ruling out questioning Yoon over treason. And that is something the opposition parties have levied against President Yoon following that declaration of martial law that they claim was treasonous and illegal. Just to catch you up, Prime Minister Han Duck-soo will manage the nation's affairs going forward as the ruling party prepares for an orderly exit plan, and the opposition is possibly trying to line up another impeachment vote. Obviously, that one was scuttled on Saturday when essentially the ruling party abstained from that vote. All right, let's bring in Troy Stangoran, Hyundai Motor Korea Foundation Center Director at the Wilson Center, which is chartered by the U.S. Congress to advise on global affairs. So thanks for joining us, Troy. Where do we go next in South Korea? Is it almost a foregone conclusion that President Yoon will need to be either forced out or step down?
I think that's the case. We're at a point to where his party, the People Power Party, is trying to find a way to maneuver him into resignation. They would like to try and avoid another impeachment, because this would be the second impeachment of a conservative president in 8 years. But I think where we are right now, you're seeing there's questionable constitutional issues going on in terms of trying to remove his duties from him when he hasn't been removed from office. But this is essentially the message that the PPP is sending, is that the Prime Minister, Han Duck-soo, will take and be running the government while the president will be taking and moving towards resignation. And so I think it's either resignation or impeachment at this point.
But in the meantime, that sort of creative solution around who will be managing which affairs is certainly attracting criticism from the opposition party, at least. And it does seem like a lot of people Koreans in the streets as well, who are saying that it destroys the order of the Constitution. What's your take on that?
There doesn't seem to be an avenue for taking the president's powers away within the Constitution unless he is impeached. And so this is a real question, I think, and it's a constitutional challenge, because we're at a point to where people are trying to take and essentially design a process on the fly, and rather than taking and following the process the Constitution has put in place. And so to an extent, this would have been much better if the PPP had not boycotted the impeachment vote on Saturday and this had already been resolved. We have another impeachment vote set for Wednesday. And from a constitutional perspective, that would probably be the best course should the president not resign before then.
Troy, you've had some time to think about this. I mean, is this going to have a lasting impact on South Korea and the so-called Korea discount and just the confidence outsiders have in the nation? Or is it more procedural, whether, the police arrest him, investigate treasonous behavior, he's ousted or he's impeached and they have a vote and they move on? Or is this going to have a deeper-seated ramifications?
I think we're going to see short-term implications. Markets do not like uncertainty, and we have political uncertainty right now. We also have a political vacuum at the moment. But if we look back to the Park Geun-hye impeachment 8 years ago, there wasn't much impact on the economy in the medium to long term. I think once we have certainty return here, be it either through an impeachment or resignation, then we know the process going forward. If it's an impeachment, the Constitutional Court will have to verify the impeachment, and then you'll move into a 60-day election period. If the president resigns, we'll move into a 60-day election. So I think once we have that certainty, the economy will start to normalize.
Democracy is still a relatively young concept in Korea. Do you see these events as a signal or symbol that democratic processes are working? Or do you think that it's a concept that has not fully taken hold yet in some parts of government?
I think democracy is something that we're always working on. This is a situation to where it's clear that President Yoon misinterpreted his powers and reached very far beyond them. That being said, the fact that the National Assembly, including, I should point out, with members from his party, quickly voted to rescind the martial law authority, and the president did eventually, within about 3 hours, follow through, shows that democracy is strong and holding. But it's something that I think Koreans are going to have to think about in terms of how did we get to this point? What types of guardrails might we need to put in place to prevent this from happening again in the future?
What's your biggest takeaway as far as the geopolitical implications if, for example, he is ousted or there is another vote and the opposition comes in? We know the opposition leader Lee has talked about wanting closer economic ties to China, possibly even, I wouldn't say a sunshine movement, but at least some sort of warmer relations, if you can call it that, with North Korea. But that also puts into question the trilateral arrangement between the U.S., Japan, and Korea that President Yoon has fostered. How do you see the broader implications?
So the immediate implication is that regardless of what happens here going forward, there's going to be a political vacuum, and that is going to make it difficult, whether it's through the impeachment process or resignation, for South Korea to really do anything on the international stage, likely for the next 60 days to potentially up to a few months. And so in that period, that means they're not going to be able to engage the Trump administration. They're not going to be able to take and engage North Korea. They're not going to be able to take and engage with China. I think that is the immediate ramification of all of this, is that you're going to have this vacuum, which will prevent the government from engaging its partners. In terms of policy after that, in any short election, there is a very strong possibility that Lee Jae-myung would win. It's not a certainty, but he would have a much stronger case, given that he just barely lost the last election. If we look at this in terms of policy, the Yoon administration was already trying to take and repair some of its economic ties with China. So I think you might see subtle shifts further in that direction, but I don't think you'd see much change in the course of direction. In terms of North Korea, I think one of the real difficulties here is that Pyongyang and Moscow have a very tight relationship, one that I think is tighter than many people want to acknowledge. And there really isn't scope, I think, in the absence of the end of the Ukraine war, for South Korea really to do much on the North Korea side of things. And then on the trilateral, I think a lot of this will depend on who the next president is, how committed they are to better relations with Japan, and also, to be honest, how committed President Trump will be to taking improving the trilateral as well. And depending on how that plays out, will really, I think, determine what the fate of the trilateral is going forward.
So, whilst there is that political vacuum that's in place, do you think that Pyongyang is likely to take advantage of that in any way, and especially given its very close relationship with Moscow?
I think we could see North Korea try to take and deepen divisions within South Korea, perhaps taking and trying to play within domestic politics. But in terms of any type of kinetic provocation, I think that's unlikely. Right now, we have over 10,000 of North Korea's best troops. They're in Russia fighting against Ukrainians. Much of North Korea's artillery, ballistic missiles, has been shipped to Russia for the war. So I think it would be very precarious for North Korea to try anything militarily right now. But would they try to take and engage in terms of trying to deepen political divisions in South Korea? I could see them trying to take that step.
Troy, thanks very much for those insights. That was Troy Stagneron there, director at Wilson Center's Hyundai Motor Korea Foundation Center in Washington, and we'll have a lot more ahead. This is Bloomberg. You're watching The China Show, and you're also seeing Chinese equities there just flipping into positive territory for the most part. So we had those CPI figures coming in earlier. CPI did worse than what economists had been expecting, so a gain of 0.2%, certainly very anemic there. But PPI did better than what economists had been expecting, still in contractionary territory, down 2.5%, but better than the survey had estimated at 2.8% negative. So that's the market reaction there. As we said, benchmarks now turning mostly positive. Some of the movers that we're tracking today, well, NetEase is one of the ones that we've been focusing on because it's very much that story around that gaming renaissance that we see in China. Actually, Chinese games, it can be an antidote to weaker economic growth, can actually be the time at which gamers do see better numbers. But we are seeing NetEase there gaining because analysts are saying its Marvel Rivals game has made a strong debut, and so that bodes well for future monetization. Gold miners to track as well because we've seen the PBOC back into the gold markets, adding bullion to its reserves in November. So it had been a 6-month pause. They've ended that and buying 160,000 fine troy ounces of gold last month. So clearly there's that diversification plan. You're seeing those gold miners that are moving to the upside, Steve.
Good safe haven with a lot of geopolitical risk going around the world, as well as, all those gamers, when the economy's going bad, stay at home and shoot people.
On your computer.
On your computer,
yeah.
Right.
Let's make that clear.
Call of Duty.
But that is some of the things that we're tracking this morning. As we said, CPI figures have really been the headline for us this morning. Inflation's still not doing great, but that gold story also part of the efforts from the PBOC there, boosting gold prices. And you've had the likes of Goldman Sachs, for instance, saying it could reach $3,000 an ounce in the course of 2025. But that's it as we track Japanese equities going into their lunch break just ahead. This is Bloomberg. It's 11:29 a.m. in Tokyo, and Japanese markets, traders, they're just about to go into their lunch break this morning. We are seeing the Nikkei 225 a little bit in the green today, as is the Topix up 0.4%. The story really in Japan has been around the economy this morning because we had that GDP reading coming through, growth of an annualized pace at 1.2% in the 3 months through September, so better than what economists had been saying. And it certainly supports that view that the BOJ may need to hike rates when it meets next week.
Yeah, that would be interesting, obviously. Chinese Premier Li Qiang, meanwhile, we're moving to China, has taken a swipe at measures to restrict trade as Beijing braces for potential tariffs from a second Donald Trump administration. Without naming the U.S. directly, as they rarely do in these kinds of speeches, he spoke at a gathering of international organizations an hour ago about the risks to globalization.
If we look at the obstacles holding back economic globalization, some countries are easily resorting to high tariffs and erecting barriers. And we're seeing more and more trade restrictive measures.
Chinese Premier Li Qiang there. Now to our China Decoded segment, and we're taking a deep dive into the potential impact of Trump's threatened tariffs on China. Companies including battery maker CATL and EV industry leader BYD are already adjusting plans to move production to places leaving them less exposed to those levies. U.S. companies such as appliance giant Whirlpool and shoemaker Steve Madden are also warning the new taxes would raise the cost of their goods. Trump has now admitted he can't promise Americans that prices won't rise.
I can't guarantee anything. I can't guarantee tomorrow. But I can say that if you look at just pre-COVID, we had the greatest economy in the history of our country. And I had a lot of tariffs on a lot of different countries, but in particular China. We took in hundreds of billions of dollars, and we had no inflation. I'm a big believer in tariffs. I think tariffs are the most beautiful word. I think they're beautiful. It's going to make us rich.
Earlier, we also spoke to Hui Shan, chief China economist at Goldman Sachs. She talked about the impact of potential U.S. tariffs on China's economy.
Our assumption is a 20% effective tariff rate. For some manufacturing goods like machineries, equipment, we do assume there will be 60% additional tariffs, meaning from 25% to 85%. But we also examined the 2018-19 experience. Trump didn't put a high tariff on consumer goods, so we put much lower rate of tariff going forward for consumer goods. If you blend it together, it's 20%. Percentage points that we are assuming in our baseline. Just to compare, 2018-19, after all the tariffs, the effective tariff rate is only 10%. So adding another 20 is doubling what we saw in 2018-19.
Let's bring in our guest to discuss this. Andrew Tam is CFO at Hong Kong-listed shoe and leather goods maker Stella International, and also with us is CLSA research analyst Chris Gao. We can start off with you this morning, Andrew, a business that's working with very well-known names like Balmain, Moncler, Jimmy Choo, Nike, Under Armour. How are you thinking about this tariff impact?
Yeah, so President-elect Trump was the president in the last administration. So almost 5 years ago, there was a tariff increase then. And actually, most of our customers have actually already adapted and thought for a plan B. What would happen if tariffs further increase? So it's 5 years now. If there's tariffs again at a higher rate, people are pretty well planned. So when we look at a China production, most of our production actually now is originated for Europe. Okay. The other aspect is actually China for China. So a lot of the brands still look at China as a consumer market. That's still a growing market. So what they have done is transform their production for a speed-to-market, faster-changing demand Chinese market. So that's number one. But two is also a lot of the manufacturers themselves have migrated overseas. We expanded to Vietnam, Bangladesh, Indonesia, also Philippines. Half of production is in Vietnam today, and we've been there for almost 3 decades. And I think this trend of moving some of the production from China to a newer area will continue, I think, over the next few years.
But how much of a margin squeeze is there going to be for the manufacturers, and how inflationary is it going to be on the end price in the United States?
That's a good question, Stephen. So when you think about across manufacturing, I don't imagine any manufacturer earning more than a 20% net margin basis. Okay, so if you have a tariff, anything more than 20%, most of the manufacturers won't be able to support it. So typically, the tariff is passed through at the end of the day through the supply chain to the end consumer. Because between the X factory cost from a manufacturer to the end retail price, there's almost like 75% margin. Okay, typically 3 or 4x the price. So there's a lot more margin to pass through to absorb on the consumer side of the equation.
It's not just, of course, tariffs that could apply to Chinese-made goods. It's tariffs that are on other countries as well. And the US has made it clear that it wants to close those loopholes. How much are you actually weighing or factoring in tariffs? What's the percentage point that you're working with for your goods?
So, typically I would say tariff with our customers. We'll work with them to basically source in other areas to make sure that we can diversify the production. But really, most of the tariff is really passed on to the customer, which then will ultimately pass on to the consumer. But when you have a scenario where there's tariff around everywhere into China, goods into U.S., it just creates this weird dichotomy where goods are cheaper outside the U.S. and you get a lot of travel purchases for Americans traveling overseas, or logistics will be a big business where things can get around that kind of tariff system.
Let's bring in Chris. You've just been listening to this. What's your first take, essentially, on the impact, not only of the threat of tariffs that we're hearing right now, and that's how the market's responding, and supply chains are adjusting perhaps already, but what's going to be the impact of the increased tariffs?
Okay, thank you, Stephen. So before I answer this question, I would like to take a step back.
Sure.
Regarding this tariff impact. We would like to see how the situation is different versus what it was in the year of 2018, 6 years ago, right? So the first difference is this time the tariff is under a global context, right? So it's not just between China and U.S. It is on all goods imported to U.S. And also there will be some additional tariff between China and U.S. That's the first thing. And the second difference is, along with the 6 years development from 2018 to right now, actually China has been seeing lower reliance on the U.S. imports among all the China exports, right? Apparel can be a very good example. And the third thing is, actually, all of the companies, OEMs, no matter if it's China company or a global company, has becoming more resilient, more adaptive over the past 5 to 6 years. So, of course, in 2018, we have trade tensions, more notably between U.S. and China. And don't forget, we also have pandemic impact, which caused disruptions in supply chain, in logistics, etc. And the survivals requires companies to become more adaptive, to diversify the production base, to make themselves more flexible in terms of everything. Right. So definitely, going back to the direct impact, of course, if there will be additional tariff globally, there will be a rising cost base of all the brand customers, right? And under these circumstances, the brand need to make a very critical balance between market share, between price stabilization, and actually the profitability. Right. So going to the next step is we will need to see if the brand could really just adopt a very straightforward and the easiest way, like the price hike, or they will think of other ways to better mitigate the risk while protect the profitability, while protect the ecosystem of the value chain.
You talked about the global tariffs, and Andrew talked about diversifying places where you manufacture, whether it's Vietnam and elsewhere. But part of the proposals, I guess, is to close the loopholes of third nations of Chinese products going to or being made or shipped, re-exported through other areas. How does that impact then a company like Andrew's, which is diversifying its manufacturing base? You are a Taiwan company, but based in Hong Kong, is that correct?
We're listed in Hong Kong, but most of our operations are over Southeast Asia.
Yeah. So from the current, tariff framework on the table, we can see that basically a 20% global tariff planned for all goods imported to the U.S. While for China, it will be a 60% as a preliminary plan during campaigns of the Donald Trump president elected, right? So we will see that for China's tariff, it will still be higher than that of global. So actually, diversification of the production base is also very necessary right now. And also, in terms of the cost structure, we definitely see the structural trend that diversifying the production base to more cost-efficient locations with actually more labor advantage is also better for the OEMs as well as brand customers in the long run. So this is still a very necessary step. And in terms of the ways to actually better address the balance between price stabilization as well as profitability, of course, brand will think of other ways to do. Firstly, as to optimize the cost structure, brands can actually optimize the product mix, developing more high-margin businesses so the structure can be better. And secondly, of course, enhance the global sourcing capability. All right. And actually, all of these could go first before brands finally decided to maybe pass on some cost to consumers. And this could be a more sustainable way. And all in all, we think that although this could be a challenge globally for the tariff impact, we also think this is a real opportunity to screen out outperformers.
So how are you thinking about this, Andrew, then? Because all of these sort of measures to try and counter the tariffs, they kind of sound expensive. And so they're going to be something that impacts your bottom line. Chris just mentioned about trying to find those higher margin products. Does that mean you lean more into the luxury brands that you work with as opposed to some of the cheaper products?
Actually, for most of our customers on the luxury side, they're mainly European customers. So most of the products do ship to Europe. Which is kind of outside this U.S.-China, say, tariff. But more importantly, again, our production, we just want to shift it from a place where, if there's a high Chinese-U.S. tariff, to a production base where there is no tariff to the U.S. or a much lower tariff. And that will help our customer kind of solve that problem as well. And we're always looking for new places to expand to as well. I think there's always geopolitical risk, tariff, friction. What you really want to do as a manufacturer is diversify your production base as much as possible, so it gives your customer a way to low balance on these kind of issues.
I have a question about the Europe story then, because we kind of see right now there's that pressure coming down to car companies in China to diversify their production bases to Europe. Would you also look at Europe as being a basis for production there?
We have actually. In fact, we think from the footwear, handbag, accessory perspective, Italian makers are the best. Okay, there's no doubt in terms of quality, and we've always actually looked at places to expand our manufacturing in that area as well. So we'll continue to look. I think if the opportunity exists, we'll definitely do something there.
Let's bring up that full screen graphic in using television jargon there to see the different customers that you have. As a preface to my next question, essentially, from my understanding, especially for Americans, when they've set up the OEM factory networks here, they really do put a lot of pressure on the manufacturers to squeeze their margin and basically shave costs. So there is not an inflationary side to it. But what are you hearing from your customers, as you see on the screen here, as far as their ability to raise prices?
You know, for our customers, we are great partners for a customer. We're in long-term business with them, very strategic. So what we always do is work with them on like how to get around product design to lower costs if there's necessary to potentially increase cost from a tariff position. So I think design, product development, re-engineering is a big part. Okay, but second is really again helping them, giving them production for goods that are shipped to U.S. in basis low tariff. If they're goods that are shipped to Europe, you know, of course, all these brands are global brands anyways, we'll manufacture them in China instead. So we'll help them get around that issue, actually.
Chris, how inflationary is this going to be? Any final thoughts you have?
Okay, so if you look at the U.S. CPI data, starting from 2017 till now, actually, if you can find out that during the year of 2018-2019, actually the upward trend of CPI is not very significant in reality, right? So that actually provides a little bit of proof to our thoughts that if you decided to pass on the entire tariff pressure to the customers, maybe that will not be the 100% portion. Maybe you cannot finally avoid adding price, but brand operators would definitely try other ways to optimize cost structure first, right? So this way also includes actually expanding product mix, actually includes saving from other areas of the cost base like logistics, warehouse. These are all the capabilities that brand customer has been developing. And also for OEM, apart from that, making their entire cost structure more efficient by diversifying product base, and every manufacturer are also developing automation capability, which could also help boost productivity. Yeah.
All right, Chris, great insights. That was CLSA research analyst Chris Gao alongside Andrew Tam as well. Thanks very much for your time this morning from Stella International, the CFO there. We're going to have plenty more ahead. This is Bloomberg. Bringing you the latest on developments in Korea. We're hearing from local media there that prosecutors are searching the martial law special headquarters. This is after President Yoon survived the impeachment vote over the weekend, but certainly that pressure is building for him to step down or be forced out. And we've also heard from the country's top financial watchdog, who expects a corporate governance and shareholder return initiative to return. This is, of course, talking about the Value Up program, very much in question of how that proceeds from here. Governor Lee Bok-yoon spoke with us exclusively, and that was before the failed impeachment vote against President Yoon on Saturday over this weekend.
Regardless of the political situation, this economic team, Financial Authority, Minister of Economy and Finance will be here for a while. I'll be here for a while. My term
ends in June.
June, right? And in the meantime, we'll just Value program. The essence of Value program is that for example, the price of financial sector stocks have fallen a bit last couple of days. They're afraid that the banks and insurance companies still can have the kind of discretion to make dividend or make buyback purchase of their own stocks. So we like I said, even the opposition party is quite strong about this pro-investment program, and myself, including myself, the economic team will be here at least a year or so. And the ruling party leaders, they're also quite focused on this capital market initiatives. That's why they wanted to launch this revision to Capital Markets Act. So everybody's just supporting this program, regardless of their political orientation. So it's just how it is done and the speed of the whole value program. So that's the little difference that might happen.
And you need that credibility from foreign investors at a time when you have political unrest and potentially more instability in the markets. Do you think there's a role for the National Pension Fund here to play? Because you have talked about wanting them to be more active when it comes to market reforms.
MPS has been playing a very significant role in Korean domestic capital market, and but I don't think the government can persuade MPS to have more stock in any certain individual, company or any industry. Things doesn't work that way, but they have this gradual process of changing their portfolio, to my understanding. And one of the ingredients of the whole program is that the proliferation of the domestic capital market is essential to MPS's agenda. That MPS is designed to protect the pensions of Korean national people, because the international portfolio is very important. And that's why MPS is going abroad these days. But still, the one market, because all the dividend will be made in Korean won, no matter what. So the one market, one capital market, is very important to flourish.
Should they be more active then in times of turmoil?
They will, but not in a very short time. But that's why we didn't talk to each other. But to my understanding, they increased their portfolio these days, bit by bit. I think that has something to do with that.
And that was Korean Financial Supervisory Service Governor Lee Bok-yoon speaking exclusively in Seoul to our own Sherry An. I just want to check the Korean assets this Monday morning. As you can expect, it is down. The Kospi is down 2%. The KOSDAQ down 4%. The Korean won as well has sunk nearly 1%, down 0.9%, as this political drama. There's no end in sight right now. I don't want to get over dramatic, but again, there's no resolution yet after that impeachment effort by the opposition failed on Saturday. But there is mounting pressure for President Yoon to possibly step aside. All right, plenty more ahead. This is Bloomberg. And welcome back. You're watching the China Show here on Bloomberg. Here are some corporate stories we are following. ANZ Group has named Nuno Matos as its next CEO, succeeding Shane Elliott, who is retiring after 9 years in the role. The former HSBC banker will take up the job next July and will also join the ANZ board as an executive director. Matos joins after scandals this year over alleged trading misbehavior and bond market manipulation led to senior executives taking compensation cuts. Well, U.S. Federal Appeals Court has upheld a law banning TikTok from next month unless its Chinese parent ByteDance sells the video sharing app. TikTok indicated in a statement on X that it will appeal to the Supreme Court and expects the justices will oppose the ban on free speech grounds. A ban would kick in the day before President-elect Donald Trump takes office.
Taking a look at the market action this morning, starting here with safe havens, and actually these aren't reacting too much. You're seeing the yen fairly flat, not much move coming through, and gold just fractionally higher, though we did see the PBOC starting gold purchases again, so could also be weighing on prices or feeding into prices. But it is certainly the major geopolitical story over the weekend, because we saw Bashar al-Assad fleeing to Moscow, the end of what's been more than a century, or half a century rather, of family rule there. Certainly that power vacuum that's being created in Syria as well, and the question of who are those people on the edges of that are going to really take a leading role in the next government.
You know, at the top of the hour, Mark Cranfield of MLive essentially said, as a market event, that what's happening in Syria is a non-event. You're getting much more reaction still on what's happening in Korea.
Yes, that's right. I mean, the South Korean President Yoon is facing intense pressure to step down. There's a lot of public anger. The opposition has rejected this sort of plan in the interim that's being proposed by the leader of the PPP. So that is also having an impact. Also tracking what's happening in Chinese equities. We've seen those moving higher. PPI coming in still in negative territory, but better than feared. More ahead. This is Bloomberg.